Hello, my name is Andrew Abraham and I'm a trend follower. I want to talk to you about taking every trade. When you trend follow, we don't really have the luxury of picking and choosing which trades we want because we don't know the future. No one knows the future. All the people that are on Bloomberg and CNBC and everyone loves making these predictions, but when you try to make predictions, it's probably one of the quickest ways not to make any money. I can go to countless charts. I'm just going to show you some examples, but the idea is if you didn't take this sugar trade, which went from, let's say, if you got in at 15 up to 30, basically it doubles. I mean, you could have lost your whole profits in a year. I mean, you would have missed a trade that was extremely lucrative. Or on the other side, if you didn't go short when there was a trend going down. I mean, the idea is you have to take every single trade. You just don't know which direction. I mean, and also every trade is 50-50. Here, let's just go look and just pick a basket of any of them. One that sticks out in my mind is natural gas. That's been in a severe, actually, you can call it almost a bear market, where it's gone from $5 down to now almost $2.98 just from the summer. That's a pretty big move. And then there's pieces of this move that you can take out. Excuse me about that. And here we hopefully go again. You can take pieces of this trend out, and in my trading, in my trend following, I have basically two different types of methodologies. It's a trend breakout and then a trend retracement. You can even this is a perfect example for both. I mean, you could have, well, you would have gotten an X day sell. You would have taken the trade, and you had a nice retracement up to here. You could have gone short. Simple rule on a trend retracement I use is I look to be trading with the trend on the higher time frame. I want to see like a pullback on the lower time frame. I want to see that in a simple oscillator that it's gone to an extreme, that this is an extreme. And then I have a 2-day sell. That's it. And then you go for the ride and see what happens. But the whole key is there's no magic system, there's no magic methodology, there's no magic indicator, there's no magic manager, none of it. The whole key, at least in my impression after doing this, I mean, I'm not sounding to age myself, but now I'm going on 18 years of doing this, is trying to take low-risk bets. That's the whole key of this, and not correlating your bets and looking at your open trade equity so you don't overtrade your risk. But what does it mean, low-risk bet? It's not that, that it's a low, it's a misnomer. A low-risk bet to me is that I'm risking only a small percentage of my account size. Not that I know if the trade is going to work or not work. And primarily, and it's a personal issue, some people like risking 2%. I like risking approximately 1%, and most of my trades I'm actually trading a lot less than that. But when you risk more than 1% of your account size, two things are going to happen. You're going to have greater returns, and then greater volatility and greater drawdowns. But I risk 1% of my account size on any trade. It's real simple to figure. You just know where you enter, where the trade doesn't work, or your exit, and then you figure out what is your account size, the difference, and then divide it. And then you take the trade. If it's less than 1% risk, take the trade. If it's more than that, you know what? There's one trade after the next trade after the next trade. Just give another example of a trade that you never want to miss. And you just never know how these things trend. This is the whole idea of trend following. And this is a weekly chart, so things look a lot easier on a weekly chart. But you can see this. If you didn't take this trade back in the beginning of, let's say, I don't know, 2009, in the $800 range, I mean, gold doubled. Who knows what gold will do? And that's the other point, too, when you're a trend follower. Don't have an opinion. Go long, go short. But the key is trying to take low-risk bets and making yourself available for every single trade that comes along that fits your parameters. I will be teaching a course on trend following. It'll be everything that I do. Don't expect it to be the Holy Grail, because the Holy Grail does not exist. But what you can learn, and the most important thing to learn, is a robust methodology in which I use every day. And then the other thing that you're going to learn is, or I'll try to instill in you, and it's really up to you to ingrain, is the discipline and the patience to really follow the plan. This is what trend following is. It's a marathon. It's compounding your money over long periods of time, going through ugly drawdowns, going through years you don't make money, and making yourself available when there are trends. Again, thank you very much. This is Andrew Abraham.